morning, everyone, and welcome to the PivotBoss pre-market video for Monday, December 8th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the ES in the daily time frame right now. Very narrow range for the ES heading into the RTH Open, just 21 points of range. That's 28% of average right now. You can see we've been in a very narrow range over the last week plus of trading coming out of the Thanksgiving holiday. Very, very narrow compression here with a slight upward bias as price approaches resistance, trading around the 6,900 zone. Of course, the FOMC key level from October 29th is just above right there. That's the 69.35 half level. And that's what's important about this week is we have another Fed key level coming to us on Wednesday. The FOMC statement and rate decision is Wednesday at 1 p.m. Central Time. And that's going to get us another FOMC key level like the one we saw here in October, and of course the one in September as well. We're going to get another FOMC key level, and then do we get another sell-off away from it and then back to it? Do we rally away from it, maybe bounce to it? How are we going to play off that key level? That's going to be very important moving forward. So for today, ahead of Wednesday's market here, we could see early range-bound price action. There's little on the economic calendar on a Monday and especially even on a Tuesday. So we could see further range-bound action Monday, Tuesday, back and forth. Fade the edges, avoid the middle chop, take quick targets here. And again, the bigger volatility will come Wednesday afternoon and into Thursday and Friday and perhaps into the next couple of weeks, or this thing could kind of fizzle out as we head into the end of the year. We'll see again how this thing continues to develop as we get closer and closer to the end of the year. All right, looking at the NQ. Narrow range as well. 34% of ADR heading into the RTH Open right now. Nice and narrow range inside day right now. Again, an upward sloping range. Modestly higher highs and higher lows day over day, but still mostly range bound. That means we can get one big drop here, then kind of fizzle back, rally one good time, and then drop and fizzle back. But the end result is what we've seen a lot of already lately. It's just a continued quiet march higher here within this upward sloping range. And then Wednesday, we'll get some volatility and see how that plays out heading into the end of the week and what that might mean again heading into the end of the year and into Q1 of 2026. All right, looking at crude oil. Down 1% right now. Like I've said with this one, it's mostly compressed, mostly range bound. This thing's building up for a move soon at some point. But again, you have to be patient with this one right now until proven otherwise. At the moment, we are seeing a little bit of a reaction at the previous session's low price, which could lead to a rotation back up. It's a decent reaction. 59.42 being rejected. Excuse me. And that could lead to a nice rotation back to 60.14. Maybe it gets across the range even higher than that. So again, we will see how this thing plays out. But right now showing a little bit of a reaction at the previous session's low. Moving on to gold futures here. Gold very, very quiet. 35% of ADR. Super narrow range. We've been in an ADR drop volatility zone for a while, ever since the recent spike. This thing has been pretty quiet for the most part. And again, the compression right here that we're seeing is a multi-day compression that's likely building us into the Fed Wednesday here. So we're likely within that range. That's 4,200 right here. That's 4,300, 100-point range. There's a multi-day range of 7 days right now. Could be 8 and 9 as we get into Wednesday for a breakout move. Again, overall, this market continues to trend up. But do we stay within the boundaries of this range a while longer before that breakout occurs? That's the question here. Or when do we get that break and continuation? Recently, it's taken months to kind of go sideways then go, or months to go sideways and go. But again, we'll see how fast this one goes. I'm still anticipating a little bit more compression and then expansion down the road, but watching the short-term boundaries here. 43 up, 42 down for the near-term move up ahead. All right, let's look at the YM. Flat day, 16% of ADR, 88 total points. you barely see the range. The doji is right there. That's the doji at the moment. Inside day, compressed here within a 2-day range. Again, this thing continues to trend up overall, especially after that trap and reverse. A big time rotation back up, but very narrow as we head into the RTH Open. Again, when that's the case, you want to avoid the chop. We could easily rally to a new high, then fade back. We can drop to a new low, fade back. This market could have a range of anything like what we've seen over the last couple of days. This range right here, below 400 points of range, basically. Somewhere between 350 to 400 would be nice. That would be what we're getting about here and here. But we'll see what we get. Again, the expectation is to stay mostly range-bound Monday, Tuesday, and then Wednesday afternoon, we see expansion and volatility after Fed Day. All right, looking at Bitcoin, will it or won't it? Are we going to see a rotation back down, or do we finally break this thing back above 95K and spark a year-end rally and perhaps even a Q1 rally at the beginning of the next year? This is going to be important here. 95K, the big time level. Of course, 75K has been the market structure level, and S3 zone that I mentioned could provide the next best opportunity. But if we start to squeeze and transition back above 95 in a big way, maybe this thing is on to 125K at the very least. So again, watching this very closely here, but not out of the weeds for the bulls right now. Bears still in control. And the bears could still lead to, this defense here could still lead to another rotation down. 75K would be the next key level down. Market structure level, that would provide an opportunity here to defend and then perhaps get it back to 100 and 125K, which was the idea to begin the year. If you look back here, that was our idea in December of last year. If we get to 75K to 80, that could provide a move to 125, 120 to 125, and it played out. Do we get that opportunity again? So keeping an eye on it here as this thing builds out and watching 95K for signs of transition to the upside. All right, looking at ETH, up nearly 4% heading into the RTH Open right now. But for the most part, what you see here is a downtrending market and the pullback portion of that downtrend right now, which has been in play for bears to sell and rotate this thing back down. Again, keeping an eye on this market. This should be about 2,900. I'll change that up there, but if any failure through 2,900, you open up the next rotation down. So keep an eye on this market here. 3,250 will be very important there. Can it push through and open up a return to 4,000? That 4010 level is the Fed level from October 29th. That's going to be a nice level to find down the road. Do we need one more drop before we rally to that level? So a retest of 2,000 could provide a double opportunity. If this thing drops one more time into 2,000 here and then makes a move for 4010 to fill that FOMC key level, we have ourselves a double. So again, can we get one more drop into the zone here for a double opportunity up ahead? All right, that is it for now. We'll see how this plays out here heading into the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.